Good afternoon. It's been a busy conference. I know some of you are so tired that want to come back home finally. So I wanted to briefly introduce what I think is important for this marketplace is something that will be an intermediary between institutional capital and general marketplace, because we at Stasis, we started tokenizing euro as a first asset of our platform. It's basically a crypto version of euro that is backed by actual euros. And it is live. It's available on Ethereum blockchain. You can download our wallet and transact with it. But here I'll try to explain why I think it is important. So, and my background is in hedge funds, institutional money management, like big brokerage companies, banks, and these big money managers treat everything as an asset class. And there is an asset class allocation matrix. There is like bond to stock portfolios, some theories about that and how much capital should be allocated where. But what's interesting about this asset class called alternatives is that it is getting more and more fund inflows recently. And the reason for that is the low interest rate environment in developed markets. Nobody can get a decent yield on the savings account or a CD account. There is very little yield left in bonds, in fixed income securities. So, and big pension funds, pension system in US, in Europe, in UK particularly, have deficits, fund deficits, projected fund deficits. So they hunt for yield. They try to allocate somewhere to get better returns. And that's why the whole asset class emerged called alternatives. Now, alternatives is everything besides just stocks and bonds. It is private equity, it's hedge funds, REITs, like ETFs, commodities. In fact, my story with Bitcoin has a foundation of commodity bubble back in 2008. I was trading a lot of commodities back then, and they were going up significantly. 2006, 2007, 2008, all the commodity market were really growing, and the story behind that was China. We were told that China is consuming so much stuff that in a decade it will basically consume everything we can produce commodity-wise. And look where we are, like 10 years later, China definitely consumes more commodities, but prices are three times less expensive than back then. So the reason people allocated to commodities is not because they really were buying into Chinese story, but because they were diversifying out of dollar and dollar assets. US was running fiscal deficits, dollar was going down, and the economy was not looking good in US. So people were selling dollar, euro was trading 150 relative to dollar, and all other commodities were trading, really expensive. So commodities back in 2008 had institutional exposure because they were ETFs on the commodities, they were structured products, they were indices measuring commodity performance. And this is the primary reason this asset class got so much capital into it. But I argue here that digital assets like Bitcoin, Ethereum, and a bunch of other tokens that might be appealing to investors will only increase significantly in price when there will be institutional involvement into the asset class. And it's a very sellable story actually for institutional investors to get involved, because in the whole alternative space, digital assets are the most liquid, the most transparent among other alternatives. And I have another example for you here. So this is the index of the global M2. This is basically how much money exists in the world. This is equal weight index from Bank of Japan, Bank of England, ECB, Federal Reserve, and the Bank of China. And the funny thing is, the art price 100, which is the most scarce art, correlates significantly to the global money supply. So, and you must think, like, but the art is illiquid, right? It's really hard to transact with art. You need to hire Sotheby's or Christie's. So it's really hard to make a transaction in this marketplace. And still, the index correlates to the global money supply. So with digital assets, they're much more liquid, much more transparent, and they will also correlate to the global money supply for the only reason of there'll be always some people who will want to diversify out of traditional currencies, traditional assets into something that has finite supply and very transparent. So I've got some metrics for, this is how institutional money managers gauge asset allocations. They have some expected return and expected drawdown. And what's interesting here is that Bitcoin and Ethereum has, regardless of the recent drop, have significant multiples that are appealing to institutional investors to come to this marketplace. Another interesting point is that previously, before decentralized systems and these decentralized exchanges and these digital assets, it was literally impossible for a consumer, for a small individual to transact with an asset that is kind of rises in price or has some appealing investable characteristics. And every cycle was developed as the picture on the left. So there were some smart money, friends, family, fools, seed capital, venture funds, then there were private equity funds, banks joining and buying the asset. And only then investment banks were joining and putting the asset to the public with an IPO, obviously, or the public placement. And then public joined and propelled the asset price to new highs. Now, with crypto, it's completely opposite stories. I think it's the first time in human history public got first to the asset, and institutional investors are still trying to build rails and regulation around to try it. So last year definitely there was a bubble that is correcting right now, but once governments around the world now join this race, competition race for regulation, once there are more indices introduced, more safe exchanges introduced, and hopefully companies like ours and other stablecoins will help institutional adoption. So the market will definitely have a new cycle, regardless of what you hear recently because of this Bitcoin Cash fork, etc. Maybe it will take a couple more months, but there definitely will be a new cycle. Now, stablecoins, what is it? It's a concept that was first pioneered with Tether, which is a digital version of a dollar. When I started trading Bitcoin back in 2012, 2013, it became so obvious that the market needs such asset. It wasn't called a stablecoin back then, but it is so efficient and effective to move money between different exchanges, capture the arbitrage, and just go into sort of digital cash while remaining exposure to the crypto world. So now there is a whole variety of projects launched, especially last year when all the volatility became a mainstream word in crypto. And there are all types of different stablecoin approaches. Some try to figure out some algorithmic formula to balance supply and demand. Some try to put crypto as a collateral in it. In fact, I have some statistics here. So you've got like almost 100 projects announced for the last year, and actually they got significant funding. If you look at these numbers, they are quite significant. It's almost $1 billion of capital went, like of venture money and some private institutionals trying to put to make these projects work. But only few projects are live. And the reason is very simple. To launch an appropriate stablecoin, it's not just the smart contract on the blockchain. It requires a combination of expertises, not just financial expertise and technological expertise. It's also regulatory expertise. Because when I started to analyze how to launch a stablecoin and not to classify it as a security, as a bearable perpetual zero coupon bond, which is it could be in a security world, nor e-money, because blockchain disrupts e-money in its initial stance. E-money regulation was developed when internet came along, and for governments and for regulators, e-money issuers are like black boxes. So some company issues some digital asset, or let's say money on the internet, on some website, and then there is some public that is treating this money as real money, while nobody knows how much actual money is stored within the issuer. So countries around the world came up with the e-money regulation, which is now being disrupted by blockchain. And coming back to stablecoins, so the first drop of Bitcoin in January caused a significant investment in stablecoin projects, because people continue to believe in the blockchain as a technology, but some were losing faith in something like Bitcoin or Ethereum as an asset and a store of value. Now, again, just 4 projects out of like 100 probably are live on the marketplace, and I think a bunch of this capital, of this 700 million whatever, will be lost trying to figure out appropriate business strategy for a particular project, or try to hunt and purchase customers, and will pay a lot of customer acquisition costs and inevitably vanish. I think Europe is actually taking a very good approach relative to US, because US continues to put stablecoins and crypto into old buckets, into old conventional categories of commodities, securities, e-money. My position was always that it is something new, and we need some sandbox, some legal framework to experiment with. My journey launching of stablecoins started with several governments like Malta, like Astana Financial Center, UK, where we advised them how this should be regulated, or how a small sandbox could be created to allow for this asset not to be classified as a security, not to be classified as an e-money. Let it live in a new sandbox, in a new kind of environment, and let's call it whatever, virtual financial asset. So in a sense, I compare this to cars and horses. Like 100 years ago, people were riding horses, and there was a whole framework how horses should be treated, how they should be parked, who can operate horses, and who cleans manure, etc. And now, and then cars were hitting the market. And suddenly, the rules that were applying to horses were no longer valid, because this is such a disruptive product, was back then, that it required something that of a new approach, new regulatory approach. So what is happening now in Malta already influencing the local economy? Malta, as you know, recognized digital assets as a new asset class. It's called virtual financial asset. It will license companies like ours, for example, to issue and tokenize different assets. And the whole world basically will look how it transition the economy, how big of an impact it could be. In fact, our partners are in Malta since 2011, and I can tell you right away, I mean, this year it has been a significant boom for this local economy. It probably has the lowest debt to GDP ratios already in the whole Europe. Real estate is up 15% this year, and the budget is finally profitable. I know this has been a big challenge for Greece, that was drowning in debt a couple of years ago, but Malta was also subsidized by European government as a country. But now, guess what? They are profitable, and it's not just, and the whole industry just started to move there. I mean, not even paying taxes yet, but just onboarding companies, hiring employees, renting office space, etc. So in a sense, new legal framework that should be applied for these assets to operate is a kind of car relative to horse analog. And of course there'll be mistakes, there'll be some misuses of capital and laws, but this is something that humanity needs as a test ground, as a playground to evolve and to bring this market to the new level. So we at Stasis published a book about regulation of digital assets, and we have some approach how we address that. The book analyzes 13 different jurisdictions across the world. I really think it's a race among countries right now to bring in intellectual and financial capital to their economies. If you're interested in the book, you please send your address, a physical address, to book@stasis.net. We cannot share a digital version because we spent almost $200,000 US on lawyers drafting the book. And by the way, Stasis is self-financed. So for me personally, it's not about the money. It's about bringing intellectual capital to the marketplace. We never did any ICO or any external fundraising. We are continue to developing a number of crypto-related projects to increase the community and to help institutional capital learn what could be done and how this asset class could be invested into. So another product I would really like you to check and to try it out is Crypto Euro. This is a pilot product of Stasis platform. It's a digital version of Euro. It's backed one-to-one with actual Euro. If you download our wallet, and actually it can transact with Ethereum, with Bitcoin, and there will be other stable coins in the wallet along the way. And email to w@stasis.net, we'll be able to send you 10 actual euros that you can transact with yourself or with your relatives or exchange to Bitcoin and other, and see how easy it is. Because one of the fundamental benefits blockchain offers is instant settlement, instant, irreversible, immutable settlement of value. And this feature alone has tremendous amount of applications, not just in the insurance industry, in payments, cross-border payments, remittances, derivatives trading, and settlement of assets between banks and financial counterparties. So it is disruptive. It is so disruptive that only like trying it yourself, how easy it is, you can understand the huge potential of it. But as with internet, let's say in 1993, 94, people didn't have much understanding how big it could be, how disruptive it could be. But now everybody is using internet, and our children are waking up and take it for granted, like internet. It exists, right? But there's been so much capital involved, so much human thinking and attempts to regulate it that people do not even notice now. And I think we are at the very beginning of this cycle with digital assets, and this is our part of contribution to this marketplace for the world to be a better place. Now, if anybody has any questions on institutional capital, hedge funds, digital assets, I'm here to answer all of them, because I think we, as a group, accumulated significant expertise in this space.
So, Gregory, thank you. I think you have time for one question only. Please.
Yes, so what kind of mechanisms or algorithms you use in order to make your coin stable?
So it's always backed one-to-one. We're the only company audited by a big 5 audit firm in this space. Nobody else is audited, and we have weekly audits by a reputable firm. And on a daily schedule, we post all our accounts online. So everybody can see on the transparency page on our website all assets that are on balance sheet of the issuing entity. And blockchain liabilities are verifiable on demand. So basically, we are bridging this duration gap between the traditional finance verification and blockchain verification.
So thank you very much.